Welcome to our weekly live webinar series. Our featured speakers are Professor Kenny Simon and Miss Christiana Iordanous.
My screen shared, and you could see this wonderful pattern. We'll talk about it later on. And this is your geometric pattern. We've hit your take profit as well for gold traders out there. Congratulations, you've actually followed the signals that we posted on the Telegram group. Okay, so once you've registered, you'll be brought to the links, relevant links for the webinars, relevant link for the Telegram group. So you should be there. Now, we'll talk about the geometric pattern later on when we talk about gold, but right now it is really important for us to scout the market before reaching your MT4 or MT5 platform or any other platform that has got the charts. Now, the charts, when you arrive onto the charts, that's probably not the first thing that you should be doing. Okay, you should be analyzing the market only after you have researched the market on what type currencies you need to cherry pick for the day in order for you to make that decisions better in terms of entering or exiting the market. Okay, so now I've got the economic calendar on my screen, and basically I'm doing a filtration of economic data that will be released today, only the medium and high impact news. Now, let me show you how does that look. Now, for everyone who are new to the market, this is an economic calendar. It's available on FX Stream, is available on all other type platforms as well. Brokers platform, they may have their own economic calendar, but every economic calendar does the same thing, to just announce by the day or by the week on all economic calendar, all data releases, whether they are high impact, medium impact, or low impact. Okay, so here, for example, I filtered it to only medium impact, which is in orange, and high impact on the red. So let's discard all these numbers on the right and focus only on all these flags right here. Now, what does this mean? Very, very easy. Right, to make it very easy for everyone. If you look at the red bars, they'll point you to the flags, and the flags will point you to the country. The country will point you out onto the currency of that country that would be impacted quite highly or on a medium level, right? So here, for example, we have got the red box pointing to the Canadian flag. So the Canadian dollar is expected to have some high impact in its volatility. Okay, so that's basically how it actually works. When you connect everything with the right tool, then you are getting the right type of information in order for you to help you to trade better. Okay, so when you are trading better, what does that mean? That only means that you have managed to run through a price trade plan. Okay, P.R.I.C.E is a copyrighted Bretton Academy's trade plan. And when you have gone through the price trade plan using tools that are actually free on the website, on various websites as well, like for example, this economic calendar, or even the heat map that we'll talk about, the top movers that we'll talk about on Action Forex, these are all free tools. But the idea is not just to use many, many tools, to understand what the tools are used for in order to filter out information, in order for you to be able to pick out the right pair or the right instrument to trade for the day. Okay, so this is basically, that's all to it in trading, is to be focused and having a trade plan that you will move from step to step in order to alleviate or to actually cut the risk level out in order for you to pick out high probability, low risk trade. That's all there is to it in trading. Okay, so now on my screen, we have got the Canadian flag, we've got the USD pointing out to the red ones, and we've got USD and Canada. So you've got USD and the Canadian dollar are expected to move quite a lot during that particular timing when the data is released. Okay, if you want to know, oh, what this data release is all about, you just need to go and click on it. Let's say for the first one, it says average hourly wages. Now, it's released by the government. It could be released by the statistical department within the government or even private. It could also be a speech done by the ECB president, for example, speech done by the governor of the central bank. All these are going to be announced in this economic calendar, and they all make significant impact onto the currency, and we can trade the volatility of that currency. So volatility only means it's moving like the waves, like the waves in the ocean. When there's a storm, you see that it's high in volatility. That's basically in concept with the ocean of the Forex trading market, or the ocean in the FX market, for example. So with that, it's similar. So you want to trade when there's volatility, when there's liquidity, so there's movement and momentum in the market. But of course, there's a lot of risk involved with that. Hence the reason we want to trade in accordance to our trade plan, and also to balance between fundamental analysis and technical analysis. So we've got a lot of tutorials coming up very, very soon within the FX COSMO website. So do visit it. Very soon, I'll inform everyone when we've got tutorial videos teaching you and training you on various topics and subjects, so that you're able to use them all as a tool to practically trade the financial markets online. Okay, all right, there you go. So here, for example, we have got the average hourly wages released by Statistics Canada. It measures the increase in the salaries earned by permanent employees in Canada. So it does actually have got a link with the economic performance generically. So there is an impact there. So that's why it's been highlighted as well, but not highlighted as high impact, only medium impact. So let's look at the high impact one. So now I'm going to be talking about NFP. NFP stands for non-farm payroll. This is a very important data, as you can see right here. It is released every first Friday of every month. Every new month, first Friday of every month. And it's called the non-farm payroll. Okay, it stands for non-farm payroll, but it's popularly known as NFP. So NFP is a data release that could potentially move the currencies, various currencies, but in particular the US dollar, because it is a US data. Now, this data basically, it refers to US job growth expected. And basically, it'll tell you whether or not it's slowing down or not. But in short, the NFP measures salaries, okay? Non-farm payroll. So that means non-farm salaries. So here, US non-farm payrolls are set to increase by 170,000 in January, after reporting 256,000 job salaries, right? In December. So the United States Bureau of Labor Statistics will publish the jobs data on Friday at 1:30 GMT. So at 1:30 GMT, so our time here in Cyprus will be close to about 3 or so, and then you'll see the impact happening on your chart. That means US dollar will go up and down, and what do you call that? The candlestick body itself would actually reflect its movements, mainly because of the performances of that data itself. So that data would come up with the numbers. If it is on a positive side, more jobs, more salaries, more positivity in the salary and job side of the market, then it will give rise to the US dollar. Or if not, it'll actually drop it. But it does not happen all the time, depending on its positivity or negativity in terms of numbers. So this is where traders out there will need to be very careful, get guided by their mentors and instructors to understand that it's not all about what you see, you get. You don't actually always get what you see in the Forex market, especially. So it does not mean positive data every time market goes up, negative every time it goes down. No, it's always driven by politics, economics, and geopolitics, and it can actually influence as well to go opposite the direction as well. So we need to be very careful. Hence the reason we need to look at the window of the market. Okay, so the window of the market, this is where it's really very, very powerful to also adopt technical analysis. So technical analysis is your window to the market. When you look at the charts, when you look at, excuse me. When you look at the chart like this, for example, am I sharing the screen? Yes, okay. Let me just move this about. So hence the reason we need to combine. Fundamental is what you have seen out of the charts. Okay, fundamental analysis consists of what we just talked about earlier on. Even the usage of tools or action forex, when you want to pick out the right pair, you want to know which currency pair moves the most, highest momentum, and all that. Whether or not you need to trade gold, what's happening to the news, in the news, what's happening to gold, and everything else, breaking news, all that is out of the chart. They are all out of the chart. So that comes under the category of fundamental analysis. Technical analysis is what you see on the screen. So you need to combine the two in order for you to get an idea of what you need to trade and to which direction, where is your entry, where are your entries, where are your exits as well. Okay, so you need to combine the two. In my personal opinion, when I've combined the two, I've actually managed to not only reduce the risk level, but to pick out pairs or instruments that are highly probable and low in risk. Okay, so that's the idea of how you do that by combining fundamental and technical analysis. Okay, so now this very special pattern that you see on the chart has been also picked out by the has been picked out through the signals services area or department in FX COSMO. And basically, that's where you can actually get all these signals telling you entries and exits. They are called the FX COSMO daily signals. So the daily signals are released on your Telegram, and we at FX COSMO and Bretton Academy, we conduct our research and analysis from the cherry-picked pairs and instruments, and then we draw patterns like this, and then we look at what are the possibility of trading it. Now, this is for gold. I just want to get back to gold because a lot of traders are waiting for the feedback on gold because they've followed the signals on FX COSMO daily signals via Telegram. So with that, yes, fortunately, and also congratulations to most of the traders, we've actually ridden along a very nice uptrend for gold. Now, this is gold prices. Now, if we zoom in a little bit, then you'll be able to look at a pattern that we call it a bullish pattern. Now, this bullish pattern is a very special pattern that has been drawn since weeks and weeks ago, and hence the reason we're looking at it on a weekly chart. Just giving you a little bit of an idea, because today is Friday, it's not advisable for you to let the trades run all throughout over the weekend, because this is not a good idea when you're actually still on that trade and expecting a good returns after the weekend, because it may actually disappoint you because we just don't know to what extent news could actually impact the market. Act of God, we never know which country might have something that could happen and impact the financial market, the central financial market. So we want to be really careful. If you are already trading gold for today and you're looking at a beautiful rise in your profits and you're profiting already, or even if you're not profiting as much as and not as expected, it is probably best before the market closes, before midnight your time at any country, to actually have your trade closed. Okay, so then we are able to give you feedback and everything else, and hence the reason that interaction with your mentors at Bretton Academy, including myself, is very crucial to give you all these pointers on how should you manage or wrap up your trades on a Friday. Hence the reason we call it a market wrap-up session on Fridays. So let's talk a little bit about gold, and let's talk about how gold has actually been moving up and up and up, and basically experiencing a very beautiful uptrend at the moment with gold. And let me just also insert some indicators right here so that you get an idea whether or not gold will be good trade as well from next week onwards. And then when we do our webinar, so do catch us on Mondays as well, because Monday will be our Monday week ahead webinar. So that will then give you the idea of how would it actually be for the whole week in terms of market sentiments. Market sentiments stands for the emotions of the market. We've got three basic emotions of the market. So the market could actually move driven by greed to the upside, which is uptrend, driven by uncertainty or even confusion sideways, or dropped right towards the floor and pointing towards the floor with an aggressive fall of the market. And that's basically your downtrend driven by fear. So if we've got fear in the market, people are scared of what's going on, they are uncertain of something, and then they basically fall towards being fearful. That fear will drive the market downwards. So that is where people, investors, traders are more prone to selling the market. The more they sell, the more it drops. Now, in the Forex market, the more you sell, the more you know where until where it drops, the more money you make. And the same goes for the upward market. So it's just knowing what happens or what could potentially happen, driven by what factors, you are able to pick a direction of the market that you think it would go to. So with that, once you are clear with the trend, you're able to then come up with your own signals. And this is what we are doing here to also guide you on how signals are being made or created as well. Okay, so let's get back to gold. And because it's Friday, I want everyone to also be relaxed and to wrap up their trades and to understand that there is no hurry or rush to need to trade today as much as you could be doing for the rest of the days, the beginning of the week. Okay, so on a Friday, it's probably best to wrap up your trades, close your trades before midnight your time, and just look at some pairs and plan forward. And then we'll cover all that on Monday's webinar as well. Okay, so here on gold itself, it looked like lots of traders have actually ridden on the uptrend stage by stage. That means, 30 points, 50 points, and then they close the trade, they make another 50 points, 30 points, and that would probably be, excuse me, a better idea in managing your trade. We call it trading in stages. When you trade in stages, you're able to ride along a trend that is picking up in momentum. Okay, so if it's picking up in momentum and we have all the tools rightly placed in order for us to know that across 3 time frames, not only 1 time frame, it is a big mistake, I would think, for traders, especially newbies, to only use one time frame and to decide on the trend. It's quite difficult, challenging to do so. So it's probably best for you to actually analyze the trend or do a trend analysis across 3 time frames. And what I usually do for myself is to always do it. I'll conduct the trend analysis across the 1 hour, the 4 hour, and the daily chart. Okay. If you guys have got any questions, feel free. To ask. All right. Any questions at all? Anyone? Okay, let's get back to gold a little bit. I'll demonstrate a little research tool that I've used here. It's called GBT, and I've just asked it a little bit to provide me with more information on gold. So here, for example, as of today, the 7th of February, it is said that gold has been trading or is trading at the moment at 2,868. Now let's go back to the chart, and the price right here is 2866, 2867. So it is still at that proximity of current price that GBT is telling us at the moment. Now it said that it has been marking more than 2% increase. So it's been increasing by 2%. So here, for example, it has reached all-day high on Wednesday when we were doing the when we were in the Wednesday webinar. During that time, it has actually reached the all-time high, as we have actually experienced it as well on the charts, at 2882. Now, 2882, 82 is very close to the psychological level of 80. So we have talked about it on Wednesday, where we've given some tips on where do you need to exit. So previously, since Monday, we've been trading, and we've given the take profit or TP at 2870. So that was already hit. That TP was hit. Now we are looking at it going towards 2880, and now at 2882, for example, on the highest price at the moment. So it's an all-time high. It went on Wednesday. So it's very likely that we are looking at more increase of gold's prices to the upside. So you want to be at the right side of the market. So the right side of the market at the moment for gold is uptrend. Okay. So please do not make out your own formula in trading whereby you want to do a sell because you think it's better to sell right now. It's probably best for you to be at the right side of the market. In my opinion, it is on the upside. So a buy instead of a sell, but not today. Now, today we need to actually rest as well and to prepare for the weekend and to then know through the Monday's webinar what should we do throughout the week. And I've got quite a number of signals prepared. So over the weekend, I'll look into polishing the signals a little bit better in terms of entry prices and also exit prices, depending on the application of psychological numbers. Okay, so psychological numbers are very, very powerful. I've experimented it myself over 10,000 charts across 5 to 7 years. The past 5 to 7 years, it still works tremendously well in order for us all to cut our risk level. So this is where psychological numbers play a vital role in helping you to enter and exit. We're not talking about the stop losses. Stop losses has got its own ways depending on your risk appetite as well. So just entry and exit itself by applying psychological numbers. And psychological numbers are numbers or points where they are either the valley or the peak of the price. So what that means is that it could signal reversal. So you are able to enter at the right price using psychological numbers and exiting or take profiting before it reaches a point of reversal in terms of price. Okay, so that's all demonstrated throughout all the signals that we release here at Bretton Academy and FX COSMO. So with that, we are always measuring the level of risk and picking out only high probability, low risk trades. Okay, so now if we were to go on to you've got daily signal right there, and it is titled FX COSMO Daily Signals. Now, this is how your signals look like. We do it manually here in the team at Bretton, and we come up with researching it properly, the market in general, coming up with signals. So these are your signals right here. It's been released latest yesterday as well. So we've always got the important considerations / disclaimer right there for your reading. So you need to consider reading it as well, just so that we are all at the safe side of trading, because it does carry risk management rules right here. And in my personal opinion, it's not always possible to carry that 2% risk management percentage that is very popularly advised to everyone trading the Forex market, because it's quite different and should be treated differently case to case basis. What that means is that it does depend on your capitalization. That means how much are you starting with to trade, and also your risk appetite, the leverage within the broker that you're trading with as well. So there are a couple of things to really know about your trading conditions within the broker that you're trading with. So with that, it is always a good idea to read up on information regarding picking the right broker at fxcosmo.com, because in FX COSMO, the team there with us, with myself, working together through Bretton Academy, are always looking at ways to matchmake traders and investors with the right broker, the right trading conditions as well, because it's really important for us all to actually not only generate income through trading the financial market online, but also trading on a solid platform that's been recommended by fxcosmo.com. So this is where it makes a whole difference when you're actually trading with the right partners as well. Okay, so there we go. This is how it looks, and please check out the signals page from time to time. And with that, we are able to guide you through your trading. And with Gito GPT's help as well, as you can see, it's giving us lots of information, getting it all out there so that your research would actually be structured research. Okay, so that way everyone gets help 24/7. So you are able to actually do your research and then analyze the market even over the weekend, to just get that idea of what should you actually trade. But not only that, what has been driven by volatility, what are the breaking news that has actually driven certain prices for certain instrument as well. Okay, so here, for example, now a lot of traders have actually asked me about the major pairs. The major pairs are all the pairs of currency pairs that has got US dollar in it. So you've got about 7 or 8, if I'm not mistaken, that has US dollar in it. So you've got your Euro USD. These are all major pairs. So they've asked me, oh, what's going on with the major pairs? So now if I were to actually just type it in here and demonstrate and just ask Gito, what do you think for major pairs movements for next week? So I've done my research this way and the team as well, and we are working hand in hand with Gito in order to scout the market better, to actually get the breaking news so that we can then cherry pick the right sort of information for everyone. So here, for example, let's just try to go down. Okay, now it's pointed us out to some events that we need to be very aware of. We have got key economic events that might impact, as you can see on the screen as well, might impact certain currencies. But we've got an impact on US dollar on Wednesday, February 12th, Thursday, February 13th, and Friday, February 14th. So now it's created an alert for us to understand that we may have some trading opportunities next week, but starting from Wednesday, the volatility for US dollar might be picked up or might pick up much more. So that will then give us volatility to ride along that and make more money, more profits as well. But we need to actually be very careful and evaluate our risk from Monday onwards. And that's the reason for that Monday week ahead webinar. So you need to join on Monday week ahead webinar to understand all the risks that has been laid out and also the opportunities of which currency pairs, which instruments could we be trading and put a pending order on. So we are not encouraging traders to just be in front of the screen 24/7. It's best for us to leave the precious time to do precious things with the family and children, but also be balanced in knowing when to trade, but place your trades with pending orders. So that would be a good balance. So you can, go about doing your work, but then leave the trade, especially after you have picked the right pair to trade, so that you know that you're picking out and putting the pairs on pending orders, but they are high probability, low risk trades. Okay, let's get going with this one here. Let me. So we've got two responses here. I'm just going to select one. And basically, it came back to me and it's giving me a little bit of an idea of the upcoming week's performance from, not performance, but the market outlook in a way from February 10th to the 14th, 2025. Okay, so it mentioned the first one, Euro USD. I was giving you the current sentiment, the current feeling of the market, okay, the current trend as well. It says here that Euro is under pressure. Now, we can confirm that on Monday. And on Monday, we are able to demonstrate to you using tools on Action Forex, various other tools to look at whether or not this is still true. Because whatever that is here right now, over the weekend, things can change as well. Now, I want to point that out as well. On the economic calendar, not every country would actually publish it on weekdays only. Like Japan, for example, they conduct very important meetings on a Sunday as well. So hence the reason sometimes traders get to be very surprised with a movement that they know nothing about because it's not been announced on news or anything like that. And they get surprised on a Monday. So this is where we want to guide you better in understanding and maneuvering through all these challenging timings of the market by giving you all this extra information, tips, and insights that basically is in this area of the P.R.I.C.E Trade Plan. Number 3, step 3. Step 3 stands for insight. So we've got P.R.I.C.E. So your P is your step 1. You are looking at the psychology of the market. That's what the P stands for, the trend, everything else. And then you need to be out of the charts, not in the charts. So the charts are only for your trend analysis and technical analysis. But before you reach your charts, you need to go on to step one on the letter P. Now, P stands for psychology of the market. P also stands for patterns, price action, stands for many other P's. So with this, you will carry on your step with the next one at R. So R stands for your risk and reward. This is where we guide you in understanding what lot sizes. If you've got $100, is it wise or is it reasonable, logical to open a trade with one lot? Of course not. So there are simple formula there that we need to calculate and understand your capitalization, your goal, your risk, your risk appetite, to understand what you need to open the trade with in terms of lot sizes, in terms of capitalization, as well as reaching your goal on a step-by-step process, within a step-by-step process. So then we've got number 3 right here, which was where I've just demonstrated on the researching and the analyzing part of it. Could be on fundamentals, could be on sentiments, but this is where we use GITO-GPT to conduct a proper research to help you understand what's going on in the market. Now, you can Google it, but by GITOing it, by using GITO, you're specific to trading the market and analyzing the market for the industry. Now, we are within the industry, so you can Google it, but you wouldn't get straight into the market, because you try Googling what I've just GITOed, and that basically will give you a whole different dimensions and perspective of the 2 types of research using Google or GITO-GPT. Now, GITO-GPT is created for traders by traders as well. So it's by traders for the traders. Now, we can actually see as well right here that we've got some very good suggestion in terms of pairs that comes under the category of major pairs. We just mentioned major pairs earlier on. So here we have got USD, JPY, GBP, USD as well, and it's really crucial to understand why. Why is it moving such a way, and why is it expected to move to that direction, with what driving factors? Is it political, economical? So you've got just a little bit. You don't need to actually read a whole book of information about a particular pair. So you can actually get just a snippet of information for each pair, just to give you an understanding that these are pairs that we at Bretton Academy and FX COSMO, we are watching out for as well, in order for us to generate the trading signals specifically on these pairs as well. Okay, so there we go. Now we've got factors influencing movement, for example. These are all your tutorials on the ground. Okay, so tutorials on the spot that you are able to use GITO-GPT for, in order for you to actually do your research and learn at the same time. So you can actually be off the market on a Saturday, Sunday, enjoying your time for the weekend, but in your spare time, you can literally conduct your research and learn, but learn practically, not theoretically. So that makes the whole difference in your performance and consistency in trading. Okay, so I've suggested USD JPY as well, USD CHF. Now, USD CHF stands for your dollar versus the Swiss franc. Okay, so here, for example, very, very nice piece of information. We've got risk appetite. A strong US dollar and positive risk sentiment may support the pair, while increased risk aversion could benefit the Swiss franc. So, for example, we are confused with the word risk aversion. So what you can actually do as well, like a dictionary or thesaurus, you could actually just type in that word and ask GITO. So you could do that. GITO, please explain what risk aversion means in the most simple way. All right. And we wait for Gito to respond. And it usually comes up in within seconds. And there you go. Gito is your friend. So risk aversion is when investors avoid risks investments and prefer safer options. Very easy, right? So that is what risk aversion is. So the next time you bump into this word, whether you're reading it um, anywhere online, offline, or you watch it on TV during the news, it's got this risk aversion, you know what it means, okay? Or even if you are watching or listening to the news and you're not familiar with the word, go on to Gito GPT and you're able to actually know what it means. And you can even ask it to give you examples as well. If you're still not clear, ask it to give you examples as well. Okay, so there you go. So when there's risk aversion in the market, safe havens assets go up because more people are buying them. So then there you go. You can type and ask Gito, what does safe haven mean? What is safe haven assets? So then they'll give you another definition, ask it to give you examples as well, and you are there on tutorial right on the spot. So imagine this, you are cutting your time in learning because you don't actually need to learn for 6 months, 3 months, one week, and then start trading. You can start trading right now. Okay, you can start trading right now, get guided by us at Bretton FX COSMO, together with Gito right by our side to guide you on researching the market, as well as giving you all sorts of practical information on the go. Okay, so this is where we won't actually miss out opportunities as well and learning while we are on the go. So I think it's going to be a very useful tool for everyone, no matter which level you are in. Okay, now I'll open the floor for questions as well. So anyone has got any questions, please feel free and play around over the weekend, today onwards on the Gito, because we've got limited spaces to try the beta version at this moment of time. So we've got only selected people that has been given the link to try it out and to give me feedback as well. Okay, so this will be released very soon to all the traders in within the community of Bretton Academy and FX COSMO. And we want to actually serve our community better, especially the traders and the partners as well and investors on how to actually navigate through the market with your investments better. And that's what we do. All right. Any questions at all from everyone? Peter, I think you've got many questions. So you've got 5 of them. So one each would be great as well. Yeah. Okay. Is Peter still online? I think he's. All right. Maybe Dima, anyone else? Got any questions? Even on Gito here, for example. It explains very well about putting money into risky assets and also moving money into safe havens. So safe havens are gold, Japanese yen, and Swiss franc. Okay. Now US dollar as well. During the COVID times, it did actually turn the US dollar into a safe haven as well. Okay. Any questions? No questions? If no questions, we can always end the webinar for now, and you can always ask questions, you know, to Gito GPT as well as on all social media. We're available, fxcosmo.com. Ask all your questions there as well, and we'll be back on Monday. Is there a particular, there's a question here, is there a particular time to trade? It's a generic question. There is some logical reasons to think that there are some time or sessions Yes and no. Yes, meaning that we do have active trading time. Obviously, you don't want to trade when the market is not active, when the market is closed, like the weekend. So the Forex market don't open, it is not open, but cryptocurrencies are available on Saturday. So you are able to trade cryptocurrencies on Saturday. But then on Mondays to Friday, you can trade your Forex pairs, anything comes under the category of CFDs, contract of difference, like your foreign currencies and everything could be traded from Mondays to Friday. Now, within every day, you just need to understand that if you are combining one currency to the other currency, you need to understand that it's as simple as knowing whether or not it is active in that country. So let's say, for example, I have got Euro and USD. Okay, so or maybe make it a little bit better. AUD and USD. AUD is your Australian dollar, USD is your US dollar, right? So when you're combining the two, you're actually dealing with the currency from that particular country, right? So for Australia, you need to ask yourself whether or not in Australia, is it still active or people are sleeping? As simple as that. In US, is it actually active like a normal working time of 8 a.m. to 6 p.m. because banks are closed at 6 p.m., banks are open, business are open for the day generically all across the world from 8 a.m., right? So when you're combining the two, you could actually then see that one that is sleeping, let's say the AUD at this moment of time, it's 12 hours ahead of us, or they're nighttime now in AUD and in NZD, in New Zealand and in Australia, right? They're on the other side. So they're asleep. So when you are combining that with USD, you would get USD to move more than AUD, right? So what is more important to ask is whether or not the trading session that you have picked is actually active for the currencies in general. If both are not active, let's say you are pairing up Australian dollar and New Zealand dollar, right? AUD/NZD, then you might actually experience a very slow moving market. So it's not really worth your time to actually pick that pair if it is now, because they are both sleeping. Both countries are not in that active business hour of 8 a.m. to 6 p.m. So if you want to focus yourself on sessions, it's better to focus yourself on countries with that particular currency, whether they're active or not between 8 a.m. to 6 p.m. It's a better way to familiarize yourself with Forex trading based on an active market, as opposed to confusing yourself with trading sessions. Now, trading sessions are there generically to just make you understand that you've got a London session, you've got the New York session and all that. But it's very important for you to understand that the Forex market is not really that active in New York, in Chicago, and all others. The most active one is in London. So London activities in London, whether or not London has a public holiday on that day, whether London is sleeping time, or whether London is active business hour time, that is where you need to focus on, because that will then make you understand that you need to understand the movements of currency based on the country's activities of the day, also its political, gender, its economic situation and everything else. So if you understand that country and understand that pair, you are able to then come up with a nice pair personality type report for yourself, and then be able to pick out the pair depending on what's volatile for the day. And hence the reason you need to come back on Monday to actually go over the pairs that are active in their own sessions. So I hope that answers your question. Thank you very much for that question. That was a very good question. Thank you. Daddy-san, epic way. Thank you. All right. Any more questions? The more the merrier. The more questions, the more you learn, and the more we can practically apply as well. Okay. Okay. This is another very good question. With your experience, would you recommend gold or currency trading to build gradual profit? Okay, it's a good question. I'll reverse that in a way throughout my experience, as you've just asked. I see that it's probably better to do it the other way around, meaning to leave it to the market to tell us what should we trade for the day. Okay, I'll tell you why. If we've got our favorite pair or we've got certain pairs that we like to trade, we might be losing out on a lot of opportunity for the day. The reason for that is because the big boys, which are made of countries, certain countries that are developed countries, certain financial institutions, certain banks and all that, they make out the big boys community that controls the market. So if we pick out the pair that we like, it might not be the pair that has actually been chosen by the big boys to move the market. Okay, because they move the market, they pick out instruments that they want to move to which direction. So we might as well be the ones riding the market like a surfer on the ocean, on the waves, and basically riding the waves that has been actually created by the big boys. So hence the reason on our webinars, we'll demonstrate on how to cherry pick the pairs for the day to trade. So every day has got opportunities to trade, but we need to actually pick out the right one to trade every single day. Okay, so if you have the chosen ones only behind the, behind the or back of our head, and we like it because we choose it or trade because we like it, we might actually lose some trading opportunities on that. Okay, so I hope that answers your question. And it's a very good question because this is what we need to understand, is to experiment on what pairs moves on that particular day, because there are also pairs that move in a particular time of the day as well. So we want to introduce you to that to understand the personality of each pair. Each pair combines different countries. Different countries has got its own political, economical, and geopolitical agenda as well. It's got its own way of working out the whole economy. It's got its own way to move its currencies up or down as it wishes by its own big boys. So that's why we need to understand that side of it. And I promise you there are a lot of opportunities in a day to trade. And that's why, and the reason for that is because Forex, or the currencies market, is the largest market in the world. So you've got your stocks market, indices, you've got every other market, financial market, but Forex market is the largest market in the world. So it's trading at 7.8 now, almost 8 trillion US dollars per day. So it's a beautiful market to actually participate in, because we just got lots of volatility, lots of liquidity as well. So yes, so don't limit yourself. We just want to use the tools to help us get the suggestions from the market, and it's better that way. You'll be able to generate more profit that way by trading and picking out the right pair that has high probability and low risk. Okay, all right. Thank you, Daddy. Thank you, Daddy-san. I'll call you Daddy the next time. All right, good. Thank you for that. That's good questions you've asked. Have you been trading sometime already, Daddy-san, or are you new to trading? You've got some experience. How has it been? All right. Well, okay. Oh, good. Very good. New is always good because you've got new knowledge practically applied. Will give you a better boost in your performance as well. Okay, so it's good. So join us again on Monday and we'll take you through. So we at Bretton Academy and FX COSMO, as well as Gito now, be able to help you all in trading the financial market online. All right, good. So if no more questions, if you've got some more questions, please do ask. If not, we'll end the webinar for today. If you got any more questions, Daddy-san or anybody else? Okay. All right, guys. If no more questions, boys and girls, sorry, uh, we shall end the webinar for today and see you all on Monday. And with that, I'd like to say thank you and do enjoy your weekend. And we'll see you on Monday, Wednesdays, and Fridays. Thank you very much for now. Bye bye, everyone.